Good morning, this is Dyer Kennedy from Divergence Analysis. It is April 7th and today we have a trading example on the Nasdaq E-minis. I'm looking at a 1-minute chart and a 5-minute chart together. I'm going to show how using a 5-minute chart to determine direction and then a 1-minute chart to execute the trade help filter out the chop and create high probability entries. As we see, the morning began with a nice bullish trend in the Nasdaq, but what I want to focus on is 7:55 a.m. Eastern Time when we see the short-term trend, as indicated here, turn red, meaning that we're only going to focus on the short side at that point. This would indicate that we're expecting more downside, so we look to the 1-minute chart. This happens during this period. So you miss a little bit of the first move, but you also miss this consolidation. Instead of taking this 1-minute green arrow thinking this could be a potential reversal, you know, looking at this longer term trend on a 5-minute chart, that we're seeing more weakness in the dominant direction is to the downside. So we would disregard this, and our entry point would be at 8:22 a.m., which is around this time. This is after you've seen an initial drop on the 5-minute chart, a test back up to the resistance points as you see on the SmartLines. This is the pivot line, the gray dotted line that it tests resistance and then moves back down. So we're creating a high probability trade by filtering these signals out with the 5-minute chart. If you see, the short here meets all of our criteria at 8:22 a.m. on a 1-minute chart. We have a red arrow, meaning the velocity signal is crossing down, indicating more bearish outlook. The short-term trend is red, indicating a negative short-term trend. The price bars are red, meaning that selling pressure is dominant. So this is a good entry point at 43.51 or so. I think it's 43.50.75. One thing to note, you see a couple minutes later a green arrow. This is, if you attended our webinar a few days ago, this is going to be something that we disregard, because as you can see, we only take the velocity signals that are given in the direction of the short-term trend. So in this case, when the green arrow is given, it's just showing some consolidation in this velocity indicator below, but nothing else. It's not showing any indication that we're moving up farther. So this is the entry point. We remain confident in our trade as long as the short-term trend is negative, indicated by the red histogram, and the price bars are red. We continue working down, and this ends up being a nice short trade to begin the morning with a high probability setup. As we mentioned, one good exit point to look for is when the price bars turn green. In this case of a short, we're seeing buying pressure come back in at that point, and we'll want to be looking for an exit. Another exit to look for is once you've entered your short trade based on a 1-minute and had the good luck and the fortune of securing some profit and it moving down pretty soon. What you can do if you want to hold this a little bit more long term is revert back to the 5-minute chart and then use the buying cycles as your resistance points and exit points on the 5-minute chart. So if we got in at 8:22, which is about here, we could, after the immediate fall, say we're going to trail our stop with the trend line, which is this light blue line, and wait until a close above that line. And in that case, it would be a while. We don't actually see it on this chart, but I think a few minutes later we'd end up getting out at a much lower point. That's a way to hold your trade on a longer term basis. Alternatively, you can move in and out a little bit quicker using the 1-minute, the green price bars signaling your exit. Hope this helped. If you have any questions, please feel free to get in touch with us at info@divergenceanalysis.com, or we have information and contact information at DVAN SmartLines.com. Thank you.